Hello traders, Gary Wagner for Trending Markets. Approximately 11:30 in Honolulu, 4:30 in New York on Monday, the 23rd of November. We do have the Dow Jones Industrial Average, although off of the lows of the day, trading lower on the day, off by 1.7%, 17,792 and change in terms of where the average closed, off about 31 points, as I said. You can see the move that we saw in the marketplace as we look at this single candle. It is a very quiet day in terms of trading itself, but as we go into Thanksgiving holiday, which this week has just signaled the onset of that, of course, I expect liquidity and volume to dramatically dry up through the week. So I expect quiet and subtle moves, but I also expect the potential for increased volatility because of the decreased volume. Now, the NASDAQ also closed lower, but off about 1/3%. The NASDAQ 100 E-mini at 46.75. And then when we look at the S&P 500, the E-mini in which we're trading, that is off about 4.5%, 4.5 points, 0.22% at 2084. We talked about the fact that we would move our stops up, and I am recommending that we do that at this point. If we take a look at this marketplace, my suggestion is pretty much the same as it was on Friday, and that is to base our stop upon this 200-day moving average, which is currently at 2059. So you want to place your stop at about 2058. I don't think we're going to see this market trade to this point, but if in fact it does, realize we're in at 23, so we've got sizable profits in the market that we absolutely want to protect. Now, in terms of other markets that we are currently looking at, the dollar has been something that we have been looking at very, very closely. And we've also noticed the fact that we have seen the ceiling, this glass ceiling, roughly at 100. You can see this 100 right in here. If we carry this line over, realize the high today, 99.77. Not the high, the current, but the high, as you can see by this one candle up here, actually touched at 100. So we had that area as being in the high. When we look at the high today, it is exactly 100 on the index. So my sense is that we're probably going to see some resistance in this area, but we could easily see this market break above that, especially with the anticipated rate hike. That's going to be bullish for the US dollar. And we can see as of right now, at least, this being a weekly long-term chart, we are definitely above the closing price that we hit on Friday. But we are below this 100 mark on the dollar index, which seems to be the one mark that it needs to take out and take out effectively if we're going to start to move to higher territories, 101, 102, and 103. So traders, as far as crude oil goes, the fall, the most recent fall, has absolutely started to slow down. We have the market trading definitely above 40, 41.84. The low today, 40.41 with a high of 42.75. So we're about mid-range in the marketplace itself in terms of the distance between the high and the current in the market. My sense is that we will see this market stabilize, but really we're looking to see if it can find any kind of support at $40, $41, which is currently below the mark of where we've got oil trading at. Again, in terms of our S&P trades, go ahead. If you haven't already, move your stop up 50.58. You're long at 20.23. So to put your stop at 20.58 is a good area, and it's an area that we're comfortable with. Maintain your current long position in the Standard & Poor's. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.